Hello and welcome everybody to another video of Navigate AIF. In this video, we will be discussing one of the most commonly appearing case studies in the NISM Series 19C exam. This case study is on the topic of taxation. So let's get started. The case study is of a fund called ABC Fund, which is a SEBI registered Category 2 AIF focused on investing in equity and debt instruments of unlisted companies. The fund has garnered significant interest from HNIs and corporate investors. Among its unit holders is Mr. Dayal, who's a non-resident investor, an NR investor, who owns 10,000 units. The total issued units by the fund are 2 lakh. The income generated by ABC Fund from its investments during financial year 2023-24 are provided here. So you can see the LTCG earned from sale of equity shares being 18 lakh rupees, the business income being 45 lakh rupees, and the income from other sources being 25 lakh rupees. The question also tells us that ABC Fund has distributed 80% of its profit to its unit holders. So have you got all of this in mind? So let's see what the first question is. The first question is, based on the above data, answer the following question. For a category 2 AIF like ABC Fund, who pays the tax on the long-term capital gains arising from the sale of equity shares? So who pays the tax in a category 2 AIF? This comes from the principle of pass-through taxation. As you would be knowing, in section 115UB of the Income Tax Act, category 1 and 2 AIFs enjoy pass-through status at the fund level. What this means is that in a category 2 AIF, the fund does not pay any tax before distributing the returns or the proceeds to its unit holders, but the unit holders are the one who pay tax. The only thing that the fund does is it holds some withholding tax, TDS as it is commonly called. So the fund will hold 10% withholding tax and distribute all of the remaining income to the unit holders, who will then pay tax. So this is called as pass-through status. The tax is always paid by the unit holders due to this pass-through status. However, this pass-through status is only accorded to category 1 and 2 AIFs, not category 3 AIFs. Even the section number for this is very important. When I was attempting the paper, they asked a question on which section of the Income Tax Act provides pass-through status. That is section 115UB read with section 1023 FBA. You can look this up in the book or in my notes as well. This is the important point to note. So the unit holders will be liable to pay tax on long-term capital gains arising from sale of equity shares after the proceeds are distributed to them. So for this question, our answer should be the unit holders. Okay, that's the correct answer. Let's move on to the next question. So let's see what the question says. Calculate the taxable income to ABC Fund for FY 23-24. Now what do we know? We know that a category 2 AIF and category 1 AIFs have pass-through status. So the liability would be discharged by the unit holders for all income other than business income. For business income, the liability will always be on the fund itself. So what we can see here is that the business income of the fund is 45 lakh rupees and the remaining income is 18 plus 25 lakh rupees. So that's about 43 lakh rupees. So the fund would be liable for 45 lakh rupees. What is the question? The question is a taxable income to ABC Fund that should be 45 lakh rupees. If you do that, that's the correct answer. The explanation is the same, which is all income other than business income would be passed through and business income would be taxable to the fund. Coming to the third question, calculate the total income of the unit holders which will be subject to tax. So the remaining income apart from business income would be subject to tax by the unit holders. So that should simply be 43 lakh rupees as we discussed already, because the remaining income is LTCG, so in long-term capital gains income and income from other sources, that is 18 plus 25 lakhs. You can simply do this on the back of your hand and know that it is 43 lakh rupees. So that's the correct answer. So except for business income, both other sources are taxable and we get this answer. Very simple question. Now let's discuss question 4. Calculate the total income which would be subject to taxation in the hands of Mr. Dayal. Mr. Dayal is an investor in this fund. Now what do we know? We know the total income that the unit holders have got in the fund. So the unit holders, the total income taxable in the hands of unit holders is 43 lakh rupees. This we calculated in the previous question. We need to know how much is Mr. Dayal's share in the total income taxable in the hands of unit holders. So out of 43 lakh rupees, Mr. Dayal's share has to be calculated. We know the total number of units that are issued by the fund are 2 lakh units and Mr. Dayal holds 10,000 units out of 2 lakh units. So how much percentage of units does he hold? He holds 5% of the units. Therefore, the income subject to taxation for Mr. Dayal would be 5% of 43 lakh rupees, which would be 2,15,000 rupees. that is the income subject to taxation in this particular investor's hands. So let's choose that option, and that is the correct answer. Now let's discuss the last question, which is what is the applicable tax rate on the business income of ABC fund for the financial year 23-24. To answer this question, it's important to know the structure of this fund, whether this fund is a company, LLP or partnership. What does the question tell us? So the question has actually not given us any inputs on whether this fund is a company, LLP or partnership. One trick to answer such questions in the exam is that if it's a LLP, then it would typically say ABC Fund LLP. If it's a company, it may say ABC Fund Limited or ABC Fund Private Limited. Since it is not specifying anything, this fund is a trust fund because that is the most common structure in AIFs in India. So this should be considered as a trust fund. Now, what is the applicable tax rate on the business income of this fund? For the rest of the incomes, they would be passed through and the unit holders would pay tax. For business income, we have to know. Now, in case of a trust, the business income of the fund would be taxable at MMR. That is the rate. You have to learn this for the exam. So that's the correct answer. If it was an LLP also, it would be MMR only. That is a maximum marginal rate. If it was a company fund, then the business income would be taxable on the specified rate in the Finance Act. So I hope this helps you with all the questions that can come in the exam with respect to trust principles. So make sure that you study chapter 16 before you attempt the exam. Taxation can be very difficult for a lot of students. However, we can make it simple. If you are struggling anywhere, you can look at my detailed course on navigateaif.com. All the best for your studies. Thank you.